How are you, students? Today's session we are going to discuss the question on goodwill as well as revaluation consist the accounts, right? So we will straight away go for the question. In the question number, this says Raji and Beamer are partners sharing profits of 3:2. Profit sharing ratio is 3:2, Raji and Beamer, right? Um, Respectively. Their balance sheet as on 31st March 2020 was as follows, right? They have given some details, and thereafter they have given buildings at cost, furniture, and cash and debtors, stocks, etc., right? And equity capital balance, right? Capital balance, we can say opening capital account, partners capital account, we have to put brought forward balance brought forward. Raji and Beamer are 40 and 30,000, 40,000 and 30,000, right? That is the opening balance. And current sundry creditors, other payables, and accrued expenses, right? They have given, right? Accrued expenses. On 1st April, they decided to admit Mr. Crow on 1/5 ratio. Crow, they are going to admit Crow on 1/5 profit sharing ratio. Okay, and let's see. Wait a minute. Yes, 1/5. Okay, right. 1/5 profit sharing ratio, and they provide terms. The terms of mission are: he was to bring 30,000 towards capital. Before that, we will see what is the requirement of the question. This says journal, provide necessary journal entry, opening balance sheet, right? Journal entries, ledger. Here we have put journal entries, revaluation account, partners capital account. If you want, we can put the journal entries, T accounts also. T accounts we can put it later, because there's a limitation of space. Okay, on 1st April, they decided to admit Mr. Crow for 1/5 share, right? So terms of mission, right? Before we go for the what you called profit opening balance sheet, they wanted us to show. So we can see the adjustments. First adjustment, they says he was to bring 30,000 towards capital and 10,000 towards goodwill, right? Cash account, first journal entry is cash account, cash account debit 30,000, capital account credit 30,000. Being you have to capital brought by the Crow, right? That is the narration you have to give. You have to write the narration. I won't write the narrations, right? So that is, then you have to say here, you have to, we have to open the article ledger accounts also. Ledger account, right? cash account, cash brought forward. How much? Brought forward balance is 15,000. 15,000. Buildings, things also should be there. 15,000 cash. Okay. Then they says he brings 30,000, right? 30,000 cash account debit as a capital. Here we will say cash 30,000, right? Cash, right? Second one, it's not second one. On the same adjustment, they says 10,000 goodwill he has to bring. What is the goodwill? Number 2 journal entry, goodwill, cash account debit 10,000, goodwill account, goodwill account credit 10,000, right? Being goodwill brought by Crow, right? In cash 10,000. Then cash account 10,000, right? Goodwill account credit cash 10,000, right? 10,000. So goodwill 10,000, cash is 10,000, right? Now it's okay. And the goodwill he brought has to be shared between the partners, right? Goodwill has to be shared between the partners, right? That is goodwill account debit, goodwill account debit at partners capital account, old partners capital account, old partners capital account credit, right? How much? 10,000 debit, 10,000 saying capital account. So 10,000 has to be divided like 6,000 plus 4,000. Raji R and Beamer, right? Being goodwill shared between the all partners, right? All partners 4,000. Then you say goodwill how much? 6,000 and 4,000 shared by the old partners, existing old partners, right? So that also finished. The next adjustment is furniture is to be depreciated by 2,000. Furniture is to be depreciated by 2,000. Furniture, right? Furniture, what is the balance? Furniture account 20,000. Brought forward is 20,000, right? Building how much? 50,000. Brought forward is 50,000. right? Okay. Then debtors brought forward how much? 35,000, right? 35,000. Okay. So furniture is to depreciated by 2,000, right? Then 2,000 should be depreciate to revaluation account. Revaluation account debited 2,000, credited to furniture account. Furniture account debit credited 2,000 being, right, 2,000. Furniture account 2,000 debited credited, saying revaluation account. Revaluation account. Revaluation account saying furniture account. Furniture account 2,000, right? Revaluation, right? Furniture account 2,000, right? Debit and credited to furniture account being revaluation, being depreciation provided. And C, create a provision of 1,500 for bad debtors. Bad debtors. Provision for bad debt. Provision for bad debt. Bad debts, right? Credit. Provision for bad debts mean revaluation account debit 5. Revaluation account debit and provision for depreciation. Provision for bad debts. Debts equal provided 1,500. 1,500 debit and 1,500 is credited. So provision for bad debts 1,500, right? 1,500. This is being provision for bad debts is revaluation, right? 1,500, right? This is the double entry, right? Being what is the narration you will write? Being provision made for bad debts, right? 1,500. Appreciate the value of building value appreciated, right? Building value, appreciate the building value by 10,000. So building account debit, buildings account debited 50,000, 10,000, and revaluation account credit. Account credited 10,000 being revaluation made for, right? Then we have to say building account debit revaluation revaluation account credit building 10,000. It is 10,000, right? This 10,000. Okay. Then the adjustments are over. The adjustments are complete. Appreciate, right? Now, seventh adjustment, seventh journal entry is we have to balance the revaluation account. Right? Revaluation account. If you balance profits transferred for to capital account, right? That is Raji and Beamer. Raji and Beamer, right? That is, we have to balance this, the amount 10,000, 10,000, 10,000, right? 6,500 is the balance, right? 6,500, 6,500, 6,500 divided by 5, right? 1,300, right? 6,500, 1,300 means 3,900 for Raji, and for Ravi Beamer 2,600 for Beamer, right? Profit share. So this has to be transferred to capital account, right? Revaluation profits, revaluation profits, 3,900 plus 2,600, right? So what is the journal entry? Revaluation account debit, revaluation account debit, and partners capital account credit, right? That is 6,500, right? That is Raji and Beamer. Raji 3,900, Beamer 2,600. Okay, this is the double entry we have done, right? So, and we have to show the opening balance sheet also, right? We have to show the opening balance sheet also. We have balanced the revaluation account. We have given the journal entries, we have given the ledgers. Now we are going to prepare the balance sheet, right? For that we had to balance the accounts, right? Here capital account, partners capital account, balance carried down, right? Balance brought forward, right? This is 900, 49,900, 49,900, 49,900, 49,900. Okay, this is 36,600, 36,600, 36,600, 36,600, right? This is 30,000, 30,000, and 30,000. 30,000. Right. Now we will transfer this to the here. Raji's capital account is 49,900, right? And 36,200 for Bima, 36,600 for Bima, and 30,000 for Crow, right? Then this is 500 and 150, 50,000, 86, 100 and 16,000, right? This is 150, 86, 96, 116,500, right? Then cash account, we will balance the cash account. Cash account, carried down balance, brought forward balance, right? 40, 55,000, 55,000, 55,000, right? 55,000. There's the cash. Cash is 55,000, right? Provision for depreciation. Provision is provision for depreciation. Provision for bad debtors. Right? Stocks. Right? 55. Building 60,000 carrying value. Carrying value is 60,000. 60,000. 60,000 is the buildings. 60,000, right? So goodwill balanced. Furniture is 18,000 carrying value. 20,000, 20,000 brought forward is 18,000, right? Furniture is 18,000, that is 78,000. 78,000. Debtors 35,000. Debtors 35,000, right? And provision for bad debtors 1,500. You have to deduct 1,500, right? 35,000 divided by 1,500, right? And stocks, other things, we have to take it from the balance sheets, right? We have to say sundry creditors 40,000. Sundry creditors 40,000. 40,000. And other payables 20,000, right? Accrued expenses 10,000. 70,000, right? 70,000, 186,500 here, right? There stocks 20,000. 20,000, right? All things are finished, right? Here if you say 55,000, 55,000 is 68, 60 and 30, 90, 110, 108,500 here, right? 108,500. Then this is 186,500, right? Total assets. It is balancing. Total assets 186,500. Total liabilities 186,500. This is the opening balance sheet. Opening balance sheet. Opening, right? Brackets. Opening. Opening balance sheet. Right? This is the opening balance sheet. They didn't ask about the new profit sharing ratio, or therefore we also did not comment or provide any new profit sharing ratio, right? So kept it as it is, and this is the one they have asked, right?